Hello, everyone. Thank you for joining me here today. This webinar is brought to you by the City of Riviera Beach, CRA, in partnership with my company, WATS CPA firm. And we're going to talk about the second and first draw of the PPP loan and kind of do a recap on the EIDL loan as well, talk about the requirements for both, the employee retention credits, the expansion of the forgivable expenses for the PPP loan, and also just the PPP loan forgiveness. And then at the end, we'll have a Q&A. So try and hold your questions to the end of the webinar. I will try my best to answer as many questions as I can. Okay, before we get started, I would like to read this disclaimer. The information in these materials, as well as any additional information provided by the presenters, should not be considered legal or accounting advice. Attendees should consult with legal counsel before taking any actions that could affect their legal rights and should not consider these materials or discussions about these materials to be legal or other advice regarding any specific matter. This webinar is being recorded and may be made available after the conclusion of the event. By participating, you consent to the recording and future use of all audio and visual content. Okay, so the agenda, I'll tell you a little bit about who I am, and again, review the EIDL loan and the PPP loans. We'll talk about the PPP loan forgiveness, payroll tax credits, and we're actually not going to discuss the Child Care and Development Block Grant, as that's more specific to the child care industry. If you're interested in hearing more about that, I would encourage you to head over to our YouTube channel to watch last week's webinar that was geared towards child care providers. I'll also include in here some links to the resources that I discuss. And then again, we'll go over we'll do a Q&A session to answer some of your questions. And at the end, I will do acknowledgements. Okay, as I mentioned, I'm Audra Wilson Russell. I am the owner of WATS CPA firm. I established it in October of 2012. I am a certified public accountant here in the state of Florida. I have my Bachelor's of Science degree in accounting from Florida State University and a Master's of Business Administration from Lynn University. I am a certified QuickBooks Online Pro Advisor, as well as a certified advisor for Xero accounting software. And before we get started here, I am going to ask my first polling question here. Are you a small business owner? Okay, we have about 15 seconds left on that question. Okay, I'm going to go ahead and end this polling question. And as you can see, about 64% of you on the call are small business owners. And the majority of the presentation is geared towards the small business owner. Second polling question is, for those small business owners, how many employees do you have? Okay, we have about half of the participants answered. I'll wait just a few more seconds for the rest. Okay, so the majority of the people on the call have anywhere from 3 to 10 employees. All right, so let's jump into the EIDL loan, the economic injury disaster loan. With this one, you're eligible if you suffered a substantial economic injury as a result of a disaster or emergency. So things like hurricanes, fires, COVID-19, of course. So this is something that's been in place well before COVID, but with the bringing of COVID, the restrictions for the loans have been laxed just a little bit. For this one, you would have to have 500 or less employees. Nonprofits can apply, sole proprietors, independent contractors as well. The terms for the EIDL loans is up to 2 million, payable over 30 years at an interest rate of 3.75 or 2.75 if you are a nonprofit. And again, I'll have these links in the slides available for you after the presentation sometime tomorrow. With the EIDL loan is an advance, and they're getting ready to reopen the portal for the advance, where you may request up to $10,000 for in an advance before you get the actual loan, and it's 1,000 per employee. Although that's being contested, where originally it was $10,000 regardless of how many employees you have. But then they switched the rules kind of halfway through the process and only issued $1,000 per employee. So that could change. So keep your eyes and ears open in regards to the $10,000 advance. This time around, instead of 500 employees, it's businesses with 300 or fewer employees, businesses located in low income communities, has suffered an economic loss of at least 30%. So now they're actually looking at your revenues to see if you sustained at least 30%. And then also not an agricultural enterprise. The advance can be used to pay for sick leave, maintain payroll, meet increased cost of materials, make rent or mortgage payments, or repay obligations. The advance does not deduct or does not get deducted from your PPP loan forgiveness. Prior to the new Appropriations Act, the advance reduced the amount that you could apply for forgiveness, but that has been changed with the new legislation. And this advance is not considered taxable income. So be very careful if you received it in 2020 and or 2021. You want to be careful on those tax returns that you do not pick up the advance as income on your tax return. And the income is not required, I'm sorry, the 10,000 is not required to be repaid. Even if you are not approved for the actual loan, you still do not have to pay back the advance. Now that's the EIDL loans. Now let's jump on the PPP loans, which is the Payment Protection Program. Okay. So up to 284 billion was allotted towards job retention, certain other expenses, and you can apply for this loan through March 31st of this year. And this is true for if you have not received a loan, you would be considered part of the first draw. And if you have received an original PPP loan, then you would be in the second draw category. So they've set aside $284 billion for that. Prior to this $284 billion, they've already successfully provided $525 billion in the first draw of PPP loans. Okay, so PPP is reopening. It actually reopened last week, Monday, January 11th, for new borrowers. So if you haven't already, this is the time to kind of get your documentation in order and reach out to your bank. And the first kind of round of applications is going to specific types of institutions to promote access to capital. Initially, only community financial institutions will be able to make the first draw PPP loans on Monday, January 11th, and second draw on Wednesday, January 13th. And again, the deadline to apply is March 31st, 2021. So there's an act as part of this, the Economic Aid Impact, and it's building on the success of the first round of PPP. The SBA is continuing to address potential barriers to access to capital for minority, underserved, veteran, and women-owned businesses. So in this act, in the Economic Aid to Hard-Hit Small Businesses, Nonprofits, Venues Act, our partners in Congress have set aside funds for new and smaller borrowers, for borrowers in low and moderate income communities, and for communities of smaller lenders. So they're trying to push the money out to the smaller guys first, because they do recognize that a lot of them were missed in that first draw of the PPP loans back in 2020. And these are the types of institutions that they are considering with the first round of PPP loans. And so the Economic Aid Act is, again, for the minority, underserved, veteran, and women-owned businesses that encounter difficulties in obtaining PPP loans. And there's more information there if you would like to see about that. Okay, my next polling question here, and last polling question, is: did you receive a PPP loan in round one? Just a few more seconds. Okay, so just a little over half of the people on the call received that initial or that first draw PPP loan. Okay, so the first draw, let's talk about the first draw because there are some differences in eligibility for the first draw versus the second draw. In the first draw, you would have to have 500 or fewer employees. You can be a nonprofit, sole prop, independent contractor. Let's see, the maximum loan amount is up to 10 million, or 2.5 times your monthly average payroll cost. And you also may request a modification to increase your original first draw loan if you would have qualified for more based on the calculations of your payroll cost. So reach out to the bank that you originally applied with that first draw to see about their remodification process to increase the first draw of the PPP. The maturity of the loan is 2 years or 5 years, depending on when you receive your initial deposit or your initial disbursement of the loan funds. The interest rate is 1%, and you can defer your payment 10 months, 10 months after the close of the cover period, and we'll talk about that here soon. The usage for the loan is to cover payroll costs, mortgage interest, rent under a leasing agreement, utilities, and now we have some other expenses that's part of the new act that was just passed. So we'll talk about what those expenses are. Just a note, you cannot use your Paycheck Protection Loan for the same purposes as your SBA EIDL loan. So if you're using your EIDL loan to cover payroll expenses, then you can't cover those same payroll expenses and apply for forgiveness on your PPP loan. Now for the second draw, they're decreasing the number of employees, so up to 300 employees. You had to have used the first draw of PPP funds. So if you got that original loan and you spent all the funds, then you can apply for the second draw of the PPP. You'll also have to show a 25% or more reduction in your gross receipts from a comparable quarter. So you'll provide your banker with all of your payroll documents, and they'll kind of do the comparison to see if any one of those quarters for 2019 versus 2020, if you had a 25% reduction in your gross receipts. So submit all quarters because they can kind of like compare which quarters they want to compare. So if you did have a 25% reduction in the beginning of 2020, but you had a great revenue season at the end of 2020, then they could use your beginning 2020 revenue receipts there. The maximum loan amount is up to $2 million instead of the 10, and it still uses your 2.5 times your average payroll cost. Unless you're a hotel, casino, or theater, they're actually allowing you to use 3.5 times your average monthly payroll cost. The maturity of the second draw loan is 5 years at 1%. And again, we'll talk about the expenses that are covered under the payroll, the mortgage interest, rent, utilities, and the new expansion of expenses. So just talking a little bit about who's ineligible for the PPP. If your business was not in operations on or before February 15th, 2020, you are not eligible for the PPP loan. Entities receiving shuttered venue operator grants. So these are specific grants that are for like the hotel, the casino, types of industries. If they applied and received those grants, then they cannot receive a PPP loan on top of those grants. If you're publicly traded or a lobbying organization, you do not qualify for the PPP loan. Okay, some other provisions in here, and this first one is very important, is there's a new certification on the application. You have to certify that your current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So you're basically saying, I need this loan in order to continue my operations. So that's a new certification that's now on the application. So if you feel like your economic situation is very certain and you don't need this loan to continue your operations, then I would caution against applying and accepting the PPP loan. Expenses are deductible for federal income tax purposes. This is a big one because the way that the tax code is currently written is if the loan is forgiven, any expenses that you paid for with the loan money were not deductible. Well, they corrected that so that you can deduct those expenses. So that's a huge deal. The EIDL advance will not impact forgiveness. Like I mentioned before, that 10,000 or 1,000 per employee will no longer reduce the forgiveness amount for your PPP loan. And borrowers who return all or part of their original loan may reapply if they have not received forgiveness. Loans can be recalculated if it will result in a larger amount. Contact the bank that you applied for the first draw PPP loan with. And then these other provisions also define what a seasonal employer is. If you operate for no more than 7 months in a year, or you earn no more than a third of your receipts in any 6 months in the prior calendar year. Okay, so let's talk about the eligible expenses. Okay, so I mentioned the 60% must be on payroll and the 40% non-payroll cost. So under the payroll cost, you're looking at things like salaries, wages, tips, state and local employer taxes, group healthcare benefits, retirement benefits, group life, group disability, dental and vision. One thing that you'll notice is not on here is federal taxes. So the federal income taxes is not an eligible expense under the PPP loan forgiveness. Under 40% non-payroll, rent, utilities, mortgage interest, interest on other debt, operations expenditure, property damage costs, supplier costs, worker protection. These items I have here in green are those expansions of the eligible expenses. So under the expenditure examples or the operations expenditure examples would include things like processing payroll, your sales and your billing software, your legal, and your accounting. Anything related to the whole PPP loan process is deductible under the operations expenditure section. Property damage from some of the protests turned riots. If you were a business that were affected by the riots and you have costs that was not covered by insurance, then you can deduct those as property damage costs. Supplier costs. So if you had contracts in effect before your cover period with the PPP loan, then you can use those supplier costs as part of the 40% non-payroll. Now, worker protection related to COVID measures. So any ventilation systems, physical barriers, drive-through facilities, any kind of improvements that you've made to your business or your properties to be very cautious about COVID measures. Okay, so now we're going to jump over to PPP forgiveness. Okay, so once the loan is forgiven, it becomes income to the business. Right now, very important that you understand it is a loan until it's forgiven. Right now, it should be on your balance sheet. When it's forgiven, you apply for forgiveness, and the bank says, okay, we're going to forgive 100% or whatever the percentage is. At that time is when you'll move it off of your balance sheet as a liability onto your income statement as income. It is income, however, it's not taxable income. So again, be very careful on your 2020 and your 2021 tax returns so that you do not pick that income up as being taxable. Okay, so now you have the option to choose your cover period anywhere between 8 to 24 weeks. Before the passage of the new act, it was either 8 or 24 weeks or 8 weeks, depending on when you applied. Now it's anywhere between 8 to 24 weeks, and you can extend that covered period beyond December 31st, 2020, because the original act expired the cover period by December 31st. Now you can extend it beyond that period. The first payment deferral deferred until forgiveness is determined. So until you apply for forgiveness and get a decision from the bank, the payments are deferred, or 10 months after the last day of the cover period. So let's say your cover period is 24 weeks. So after your 24 weeks pass, you have 10 months before that first payment is due. There's a there will be a simplified loan forgiveness application for loans that are $150,000 or less. Still waiting for that to be released. The idle advance again does not reduce the amount of your PPP forgiveness. So, with the new simplified loan forgiveness for loans that are 150,000 or less, it's going to be a page or one pager that you sign and you submit the loan amount and the number of employees retained. It's an estimate of the amount spent on payroll is what you're going to put on there. And you're also going to attest that you're complying with all PPP requirements. So you're basically telling them that yes, I did spend at least 60% of this on payroll and the other 40% on the eligible expenses, and you retained all your employees, pretty much everything as it relates to the requirements. Document revenue decline for eligibility. So on there, you're going to have to show how your revenue declined. Supporting records needs to be submitted with, supporting records does not need to be submitted with the form. However, you do want to retain your records for auditing purposes. Although the SBA said that they weren't like expressly auditing loans that were 2 million or less, other agencies can potentially kind of come in and look at your records, such as the IRS or any other governing authorities. All right, so let's talk about the new safe harbor deadline. PPP loan forgiveness is reduced for borrowers that reduce wages or employment levels during the cover period. So you laying off employees or reducing the amount of wages to your existing employees. The safe harbor allows borrowers to extend certain reductions. Reductions that occurred between February 15th and April 26th of last year are excluded if they were reversed by the end of December 31st last year. So we all knew that we had to kind of restore those wages by December 31st in order to not have the PPP forgiveness reduced. Now, that's for people who borrowed loans on or before August 8th, 2020. So if you borrowed before August 8th, you needed to restore your staff and your wages by December 31st of last year. For new borrowers, including the second draw, your reductions must be reversed by the end of the cover period. So we talked about that 8 to 24 weeks. So as long as you kind of restore your levels by the end of that 24th week. If that's your option, then that's kind of your safe harbor for your forgiveness not to be reduced. Also applies to reductions due to compliance with closure orders and where employee refuses to rehire. So we know that when when you do offer to bring that employee back on and they refuse, basically have it documented, and you can use that as a reason why your wages weren't restored or your staff levels weren't restored, and that won't affect your forgiveness amount. Okay, so what you'll do here for forgiveness is submit an application to your lender. Again, that 8 to 24 weeks after receiving and spending your funds, depending on which covered period you choose. Your lender will have 60 days to determine your loan forgiveness eligibility. From there, the SBA has an additional 90 days to evaluate the lender's decision. So your lender isn't kind of like the end all be all, it has to go to the SBA for approval. There's a loan necessity questionnaire for borrowers with loans of $2 million or more. Any remaining balance that is not forgiven will need to be repaid at the 1% over 2 or 5 years. 2 years for loans before June 5th and 5 years for loans after. And again, retain all of your records. Documentation that will be needed is your 2019 and 2020 business tax returns. Some, because we're just kind of like really getting started in the 2020 tax season, instead of the actual returns, they may want to see your profit and loss statements or some type of sales record in order to compare the 2020 sales to your 2019 sales to see if you do indeed have a reduction of receipts. So at the very least, have the profit and loss statements ready if you do not have the actual tax returns ready. So your 2020 and 2019 business tax returns, your payroll tax forms, if you're an independent contractor, your 1099s, and for the sole proprietors, your Schedule C, and then again, any other payroll records, health insurance premiums, and retirement plan funding paid by the company, such as your 401k, your simple IRA, SEP IRA, because all of that stuff is counted in the average payroll cost. Okay. And other documentation that may or may not be asked for are things like canceled checks, receipts, account statements, or other documentation for payment of other eligible costs incurred and paid during the covered periods, such as mortgage interest, lease payments, utility payments. Just really depending on the bank and their process for loan forgiveness will determine what types of documentation you would need to submit. All right. So currently, there are the 3 applications for forgiveness. And remember, I mentioned a 4th one for the loans that are 150,000 or less, still waiting for the banks to kind of release that, well, the SBA to release those forms to the bank. But as of now, here are the 3 forms, and we'll review each one. All right. The first one is the 3508S, which is for PPP loans of $50,000 or less. A borrower that, together with its affiliates, receive PPP loans totaling 2 million or greater cannot use this form. So we're looking at PPP loans for 50,000 or less could use the 3508S. And again, contact your bank because they'll be the ones to direct you on which form to use based on your specific situation. There's a 3508EZ, and this is for self employed individuals without employees. Or if you did not reduce the rate of pay of more than 25% and did not reduce your employees, or if you did not reduce your rate of pay by 25% and reduce your FTE, and it was not because of operating restrictions due to compliance with COVID requirements, then you could also use the 3508 EZ. And the 3508 is just anyone who's not eligible to use the 3508S or the 3508 EZ. Okay, so let's talk about the payroll tax credits. There's the employee retention tax credit, the original one from 2020, and we'll also talk about the revised one for 2021. So with this one, it's now available to businesses who took a PPP loan. It used to be where it was either or. Either you take a PPP loan or you apply for the employee retention tax credit. Now you can apply for both. The requirement here is had operations fully or partially suspended due to COVID, or had 50% or more decline in gross receipts compared to the same quarter in 2019. The rules, there's no double dipping. So you can't use the wages that were covered by the forgiven PPP loan or any other tax credit programs. So although you are able to take both the retention credit and the PPP loans, you can't use the same expenses to kind of, apply for both programs. The per employee wage limit is $10,000. So $10,000 in wages paid to employees. And the credit amount of qualified wages is 50% of that wage limit. So you can potentially get a credit of $5,000 for the year per employee that you retained. 100 full-time employee threshold for determining which wage counts. That should say 100K, so 100 FTE employee thresholds. Okay, so now this one is the 2021 employee retention tax credit. Again, like I said, it's available even if you've taken a PPP loan. And this one extends to the first and the second quarters of 2021. So anything beyond that, this credit isn't available. This is just for the first and the second quarter of this year. And the requirement is had operations fully or partially suspended due to COVID-19, or had a 20% or more decline in gross receipts. So instead of 50%, 20%. The rules, again, no double dipping. And it's still 10,000 per employee, but it's per quarter. So now for the quarter, you can have a credit of 70% of that 10,000, or 7,000 per quarter per employee for the 2021 tax credit. And this one, you could have up to 500 FTE employees to apply for this credit. Paid leave tax credit extends the payroll tax credit for paid sick and family leave through March 31st, 2021. And it's no longer mandated that you have to pay your employees that paid or that sick leave. I would encourage you to reach out to your attorneys and to your payroll providers and your HR managers in regards to any paid leave to employees. Payroll tax deferrals, something that I kind of strongly discourage. But with this one, it extends the repayment period for employers who deferred withholding and deposits of their employee share of Social Security taxes from September 1st through the 31st, to now the end of this year, 2020. So what that allowed was for business owners to kind of hold on to their employees withholding, their Social Security withholding, and delay the payments. So kind of playing like a cash flow game there. And instead of having to pay it back by the end of December last year, this extends that until December of this year. Interest and penalties on unpaid deferred liability will not begin to accrue until January of 2022. So you're not going to get penalized or have interest until January of 2022. Keep in mind that as the employer, you will be held liable for any unpaid deferred payroll taxes, not your employee. So that money that you're holding on from your employee, you are liable for it. Now, some resources here. Gusto Payroll has a kind of like a library of resources for different funding opportunities where you can click on it, you can look at your state to see what companies, private or public, what companies, what government agencies, federal, state, what type of resources are available in your location. So I would definitely encourage you to click on that link, filter by your state to see what opportunities are out there funding wise for your business. And then also, I have prior webinars that are on my YouTube page. You can check those out. I am also including a link to the PPP application, but I would ask that you reach out to your bank because they may use a different application or it may be a completely online process, but it's here as a resource for your reference. The PPP second draw application is here as well. And the link to the EIDL loan application, and then the PPP lenders, if you don't already have one, the FAQs for the PPP, and the FAQs for the loan forgiveness on the PPPs. And then just kind of giving you a little bit more about my company. I am a virtual accounting firm. I offer CFO advisory and outsourced accounting and tax preparation services. And here are the types of services that I offer. It'll also be in your printout for further review. And if you need help with anything or like to consult with us, you can click on a link to schedule a video consultation. We do not provide any consultation over the phone. We're everywhere. So if you wanted to follow us for any updates regarding PPP or anything else small business related, you can connect with us on any of our social media platforms with the handle at WATS CPA. At this time, I'd like to open up the floor for any Q&A, but prior to going into Q&A, I would like to do some acknowledgments here to thank the Riviera Beach CRA, the Riviera Beach Community Development Corporation, and the City of Riviera Beach for making this webinar possible. So now we'll head over to the Q&A section. I'll go here in the chat and then also in the Q&A to see what questions you have. Okay, the first question I have here is, do you know when repayment begins? So repayment will begin 10 months after your cover period. So if your cover period is 8 weeks, then it'll begin 8 weeks plus 10 months after that if you haven't applied for forgiveness. But it will start after you apply for forgiveness, whichever one comes first. Next question is, do I need to apply for the second draw at the same bank for the first draw? The answer to that is no. You can use a different bank. However, you may need to provide more documentation with that new bank. If you already have a banking relationship with the existing banker and they have all of your original loan documentation, then they may not require as much information if you apply with the same bank. If you are a sole proprietor and you are the only employee, I'm not sure what the question there is, but I guess it's probably on eligibility for PPP loan. If you are a sole proprietor and you don't have any employees, then yes, you are eligible to apply for the PPP loan. All right, so you are not able to utilize the same lender you used for the first round of PPP. If they are a national bank, no. So you can use the same lender. What time frame would we use to calculate our 2.5 times payroll for the second draw? Last time it was from 2029. So for the second draw, they're allowing you to use 2019 again, or the most immediate past 12 months for your 2.5 times. When can I apply for round 2? The applications opened up last week, so contact your lender now. The EIDL advance is now forgiven, but during the time of our business, it was not. The advanced amount was taken out of our forgiveness tool. Is there anything regarding how to get this forgiven? So, just a few things that I want to correct there. It wasn't the EIDL advance that was forgiven. It was that they used the advance to reduce your amount of PPP forgiveness. So, what you would want to do is reach out to your bank to see if you can modify your forgiveness application so that they can pay you back the amount the advance reduce your PPP forgiveness loan for. Thank you. Thank you. You're welcome. Let's see if I have any other questions in the chat. If you receive forgiveness on first draw, can you also get forgiveness on second draw? Absolutely. But in order to apply for second draw, you have to have used and or applied for forgiveness on first draw. I received EIDL and PPP money during first round. My employee count has increased. Does this qualify for recalculation, or do I just apply for second draw? So, depending on when that increase happened, like if it happened in 2020 and you want to recalculate your first draw using 2020 instead of 2019, and it will result in a higher loan amount, then you can definitely apply for a reconsideration with your original bank to increase the first draw. To clarify, do you have to show declined receipts for 2020 to get forgiveness? You have to apply to get the loan. So this is before you even get to the forgiveness stage. You have to show the decline in receipts in order to apply for the loan first. All right. Is there a credit score SBA is looking for as far as your EIDL loan? I believe with the EIDL loan, they do look at credit, but with the PPP loan, they do not. I could be wrong. I could be wrong about the credit on the EIDL part, but I'm for sure about the PPP part. They do not look at credit scores. Which tax returns am I using if this would be our second loan and we are comparing gross sales from 2020 to 2019? It seemed like it was asking for 2020 returns. So yes, they're comparing 2019 to 2020. So in order for them to do that, you can provide the tax returns for 2019 or 2020. But since we're kind of early here in the tax season and the likelihood of you having those 2020 returns are pretty low, then your bank may request or require the profit and loss for 2020 instead of the tax returns. Please email me your contact information. Okay. Sandra, I'm going to put my email address out there. Send me an email address. Send me an email if you can, please. Sorry, you're not eligible to apply for the PPE loan as a 1099. Yes, you are eligible to apply for PPP if you are a 1099 contractor. You will have to show your Schedule C on your tax return in order for them to calculate your loan amount. Is the IRS accepting tax returns prior to February 21st? The opening date is February 15th, 2021, which is why I'm saying, don't wait for that 2020 tax return. At least have your profit and loss statement ready. And I think that is all of the questions there. So what I'm going to do, again, I'll put this webinar up on YouTube and send you guys the handouts and the replay to the link so that you can have that for your reference or share with any other business owners that may find this information useful. I thank you again for joining me here on the webinar and thanking the Riviera Beach CRA for the partnership opportunity.